Good morning, everybody. This is Dennis Wilburn with the Active Trend Traders. Welcome to January 23rd, How to Make Money Trading Stock Show. I'm here with David Grandy from All About Trends. Excuse me, David. I know that you are going to be, you got to bug out of here right on time today because you're going to be doing an interview with on IPOs with Channel 11, correct?
Correct.
How exciting is that?
That's going to be fun.
Yeah, and you always have such a good presence, both on over the radio and also in person. So I'm looking forward to it. I've got to get you hooked up to do one of our BAM meetings in the near future, probably either February or March, coming up, the Bay Area Moneymakers. But we didn't come to talk about that. We come to talk about how to make money trading stocks. So let's get going.
Yep.
So I want to remind everybody that all the material that we do present here is for training purposes, and that traders should always paper trade any new method prior to the risk of their own personal capital. I'm a big promoter of paper trading and learning how to do that. I want to remind everybody that the World Money Show down in Orlando, Florida is coming up. I know if you've been on this show here recently, you have seen this. I've got all these really great, wonderful presenters. And two more. David and I will be doing our world-famous presentation called, what's it called, David?
The Art of Trend Trading. The
Art of Trend Trading. And we've done this in several locations now, both around the Bay Area and a couple of webinars. And it's, I think it's a really good, a really great presentation. Don't you think?
I do too.
Okay.
I'm looking forward to doing it again.
So we'll be down in Orlando. We are presenting on the last day, which is February 7th. My wife is going with me because her birthday is on February 5th, and so we're going to get a little bit of R&R and have some good times at the World Money Show. I want to remind everybody that David and I do love to talk about stocks. Matter of fact, we talk about stocks most of the time that we're talking. And we have two really powerful presentations. One of them is called The Art of Trend Trading. The other one is another one is How to Benefit from Alternative Entries. And we can do a presentation for your group. No matter where you are in the whole world, we can do a presentation for you via webinar. If you're in the Bay Area, we'd be glad to come to your group and do a presentation. And if we needed to tailor a presentation just for your group, we can also do that. We would be glad to do that. And isn't that right, Dave?
That's absolutely correct. Yep.
And so, if you want to find out about one other thing, we do not charge to do the presentations. They are basically free. We just want to share information. But if you're interested in this, please email me at dww@activetrendtrading.com. and we can get you set up in the near future. We do have some people who have been contacting us, and we are right now. I've got some presentations to do through March, but there's still room in the schedule to be able to do others. Let's see here. So let's get talking about what's going on in the market today. After several days after bouncing off support with this nice tradable rebound. It's been a really good tradable rebound in the market. You know, my question I kind of come away with today, is this just a relief rally? Are we actually wholeheartedly going back into another, more significant gaining uptrend? Don't know. We're still looking at how January is going to close out. Is it going to close out up? Is it going to close out down? To see if we need to be wary, or not wary, but consider the January effect. It could be an indication that 2015 could just be a sideways market. But anyway, today the market is mixed. The S&P, as of when I did this slide, was slightly down, but it had rebounded nicely. It was up against resistance. The NASDAQ was approaching resistance. It was up slightly, and the Russell was approaching resistance and was also up slightly. What's going on next week? Next week, we get more deeply into the earnings season. And as you can see, if you were following this stock, or this stock, you have a really good indication of what happens when a stock surprises in either direction. Netflix, I mean, jumped up great. I mean, it ran up about 18% and has continued to add to those gains. And then F5 basically fell out of the sky, found some support and is trying to recover a little bit. But it's kind of interesting that during this earnings season, it seems like if things, if you get good surprises, the stocks are being rewarded more. The gaps seem to be a little bit larger than the average gaps you would normally see, which is about 10%. But those gaps can be dangerous to either side. And I always suggest to people, if you don't have enough profit cushion, if you own a position that's going into earnings, go ahead and take your profits, get out, see what it's going to do, or at least take a little bit off, take some of your profits off the table. You can write it up with a few shares, but in the case of Netflix, you would have been really, really happy, and in the case of F5, you would have been really, really sad. And so never, kind of, especially if you do have 5, 10, maybe even 15% with the way these the volatility is going, you may want to go ahead and just peel a little bit of that profit off the table. European stimulus, the Eurozone is trying to do their own QA, qualitative easing type of action, and the market this week got a little bit of a bump from that. Next week, what to look forward to also is the Fed does its first meeting of 2015. If you'll recall, after the last Fed meeting, the market went on a really nice rally after December 15th, and it ran up very nicely into the holidays and added to the Santa Claus rally. So we'll be keeping an eye on that. It's interesting, and if this is your first time with us, I always put down here what we were talking about last week. And as you can see, the questions that we were asked from last week was it time for a bounce? Will it be a relief rally or a more serious uptrend? S&P looking for support, NASDAQ at support, Russell bouncing off support, some of the outside influences. But as you can see, what we see going on in the market right now is directly relatable to what's tradable the next week. And so I really, David, we've done a really good job. We're pushing on doing this show almost a year now, and we have done, I think, a really great job of every week calling what's going to be happening in the market the next week.
Yeah, for the most part, yeah, it's been, well, I mean, it's just been a case of buy support and sell the rips, and buy the dip, sell the rips. So that's been the trend.
Yeah, yeah. And so here we go, looking at one of my favorite indicators is the percentage of stocks above the 20-day moving average on the NYSE. And typically we got this little bounce. This is where we were last Friday. And as you can see, we did get a nice little rebound. However, this is reflective that we're getting a little bit of a sell-off today. And one of the things that's kind of interesting is we're getting this squeeze going on this indicator. So what is that? How do you interpret that? Well, one of the things is that as we pushed up and the market was making new highs, because the S&P and the NASDAQ did, but the S&P, the Russell was making new highs, this indicator at the end of the year was not. So you had some negative divergence, and that tells us that fewer of the stocks in those indices were participating in driving the price up, and we see after the first of the year, actually, around December 31st, those last couple of days of the trading for 2014, the market started selling off and sold off really, really hard, and almost came down all the way to where it had been previously in December, and then we do get this little rebound and another rebound this week. And so while the rebounds have been tradable for nice little rallies, from my perspective, the market isn't showing a lot of really good health. It hasn't rolled over totally, and I'm not saying that it is going to do that, but it seems like its momentum, its vitality, its life has been kind of like it's waning. And it could be because, hey, we just went through 6 years of a really great bull market, and it needs to rest. Let's take a look at some. So here we are with the S&P. Here's where we were last week. That was 15th, and then we jumped to 15th, 16th, got a little bit of a bounce there, and then we've continued up this week on this rebound. Broke out of this downtrending, short-term downtrend line, and is now, as you can see, right back up into a level of resistance. Now it breaks that level of resistance, where we're going. We're probably going to go back and retest the highs. And we are getting some good action if you're trading basically strategic trading off of the moving averages, waiting for a good bounce at the 8-day moving average, or even back down here at the 50. Could go bounce and break through. And but I could see the market kind of doing one of these like this throughout the year. At the same time, if we break out above this level, then we're back in the uptrend business, moving back up towards this upper channel line that we see here on the weekly chart. So this week you're getting some good positive action. It appears right now on the daily chart at least that we may have a hanging man candlestick for today, which is a bearish reversal signal. And we are at resistance. So that's what we got for the S&P. NASDAQ. The NASDAQ and the S&P, those who have been getting the daily updates from the active trend traders, I've been talking a lot about how the NASDAQ and the S&P have been almost in lockstep with each other, moving up at the same, kind of same pace, the same direction, the same magnitude, and there we go. And we see that's happening a little bit again here. Now, the NASDAQ is approaching this resistance formed by this trend line. It broke out of, because we could have drawn another trend line here, just short-term trends. We could have drawn another one here, and it broke out of that yesterday and moved back above the 50. And in reality, it looks like it may be in gear to go all the way back up there, retest 4,300, or even retest its prior high. Remember that on the NASDAQ, its all-time highs are up here about 4,600. And so those are definitely within a stone throw away. And on a larger picture, we'll see if we bounce through that particular resistance there. Things are looking like they're getting in gear from, we still have some differences between the, as you can see, the momentum on the weekly chart is still heading down. Or it does look like some of these other momentum indicators, especially the true strength indicator, is trying to bounce prior to hitting the zero line, which can be a positive sign for at least a little bit longer term uptrend with the index. Let's take a look at Russell. Russell really made a really good move, and actually looks a little bit stronger than the other two indices. Have broken back up above the 20 and above the 50 after bouncing here off of support at 1151, and is now moving. It will hit its initial resistance at 1200, and then its all-time high back up here in the 1220 area. And so again, are we going to go here? I would expect some either strong resistance here for it to pull back, or bust through there, hit this arrow, strong resistance here to potentially pull back. And as you can see, looking at the right-hand chart, which is the weekly on the Russell continues to work within an expanding top with an expanding top. We've got this expanding top here, which is on a daily chart, which has been going on for several weeks now. Actually, yeah, going on for almost, in excess of a month. And then you've got this larger expanding top that is highlighted over here. Typically, expanding tops tend to be bearish type formations. At the same time, it doesn't say, just because it's a bearish looking formation doesn't mean, oh, I'm going to go out and get short on everything, because in reality, as you know, those of you who are early warning and alert folks, we actually got into a long trade on one of the Russell derivatives, the TNA, and picked up a nice little profit in a couple of days, and we're still in that trade. So, Dave, that's what we got going on for the market. And today is getting close to, if we stick right there with a little doji, that is a sign of indecision, where the buyers and sellers are basically come to equilibrium with each other, and neither have won the battle for the day. So that's what we got going on in the indices. Perhaps some more upside. A little bit of mixed signals between the weekly and the daily, but nothing that's saying either get out and or get in. You mentioned earlier that individual stocks and the markets have been really great at find out where that strong support and that strong resistance is, and then one can trade off of those two, the support and the resistance, because we see that happening in Russell considerable number of times, all the way back, going back to November. You could trade it between 1150, 1160, back up to 1200, or back up to 1213, 1210, and that's kind of your range. And it's tradable, but it's not one of those that's going to be, it's not giving that nice longer-term trajectory. So that's all I got for today. Dave, any questions, guys? Okay. Dave, I'm going to switch over to you. And
okay, thanks a lot, Dennis. So I'm just going to start with the slide I had up here last Friday, and that's when the market was, was down, and we were like, oh boy, it's make or break time. And so at that point, indexes were holding support. We were last Friday, if you recall, we had our first up day, and so support, did it hold? Yes. Leading stocks were attempting to rally from support levels as well. They held that and they rallied, and the question was, is this another buy the dips opportunity? And the answer is now yes. I mean, it was very clear. I also mentioned that as long as the trend of buy the dips, and every time we pull back to support levels, it gets bought, we have to respect those trends and respect what's happening in the charts, and we're glad we did, because we're much better off for it, for doing that. So let me just visually show you what we're talking about here. This is where we were at last Friday. We had our first up day off of support. This is where we are now today. We had 4 straight up days, and now it's likely that we could pull back here as we're a little bit short-term overbought, and we have a little bit of a resistance level, as Dennis alluded to. So that has been the trend. It's almost like every time the market goes into a correction or is labeled to be in a correction, that's the time to go buy. And every time the market is now in a confirmed uptrend, that's the time to start taking profits. I mean, that has been the trend over the past few months. I know that's a little different than common methodology, but that's how we do it. We buy stocks at support and we sell into strength. So, and this is our trading plan. We don't chase stocks. We'll let them come to us. We buy support. We sell into strength. We sell into resistance, and we do the opposite when we're shorting. So, and again, I talked last week about how easy it is to let your emotions get into things, and particularly last Friday after we had a really bad day, the Thursday prior to that. And if you just look at the charts, it's just easy to do what the charts are telling you to do, and that is, hey, we're bouncing here from support, and we just got to stick with what we have and make the most of it. So that's exactly what we're doing. Here's Facebook. Here's a breakout attempt that was done right about when the market was deemed to be into a confirmed rally again, and then it comes back down here. Market is now in a correction, and voila, Facebook is at a support level, and it rallies from support. And here we are looking just like the index charts, facing a little bit of short-term resistance here and possibly could pull back. So this is setting up a nice opportunity for us if we do indeed get the pullback. This is SLCA. There's been a lot of talk about energy stocks, obviously being well oversold, and you got to think that there's going to be bounce at some point in this sector. We're starting to see some positive structure on some of the charts. SLCA was a very high-quality stock, still is. Just got caught up in the rout in the oils and energy stocks. So this is how it looked last Friday, and here we are today. Again, it's making a nice little pattern here of higher lows, and it's setting up again as another little pullback here. As long as it continues to make a higher low and moves higher, we're going to stick with this trade. So and it's really that simple right now. It's buy the dips, sell the rips. We already dipped. Now we're starting to rip, and we're starting to let go of some of our positions, and we'll continue to do that should the market work its way higher here. It may, as you were saying, Dennis, it may continue to pull back here, as it's at a logical place where it could do that. And should that happen, it'll set up the pins again for us to add to some of our, to continue with our current positions and add some new positions. So that's what we're going to do. So as long as the market keeps moving higher here, we're going to be looking to close out our current positions here. Should it pull back, we will continue to stick with our positions and look to add new ones. So that's what we're doing. If you want to see it in more detail and see all the stocks that we're tracking, we have a 15-day free trial at our website. Most of you guys are either subscribers or have taken advantage of this trial, but those of you who haven't, I definitely encourage you to do that. And there's no credit card or anything. Just go to our site and tell us where you want the newsletter sent. You'll get everything our paying subscribers get for free for 15 days, and then you can decide what you want to do after that. So that's about it, Dennis.
Hey, thanks, Dave. You guys are doing it. You're seeing a lot of the same thing that I'm seeing in the market right now, and it's just, it's still a market of base hits, not home runs. But at the same time, you start chipping away. And somebody sent me this really cool email the other day, and it's said that Warren Buffett, talking about Warren Buffett, everybody thinks Warren Buffett's this the really great guy, and he's definitely a very wise investor, and he basically makes a return of about 20% per year, right? But think about that. But he's compounded that 20% over 55 years worth of investing.
Right.
And while 55 cents to 55 or 20% per year for a trader, good trend trading systems are going to give you somewhere between 30 to 40%, or more. And so if you can get consistent in how you do your profits, it's absolutely phenomenal. And have fun. My wife is heading out to get her hair cut or something, I don't know. And she stuck her heads in. So, okay, a couple of questions, Dave. One, Dorothy asked, David, is the upside for a POH stock a revisit to the past high? I guess that's the upside target.
That's typically where we'll look to lock in gains, yeah.
And so,
particularly in this market where you don't get much more than 5% or so on stuff, like you were saying. It's a base hit market.
Yeah, without a doubt. I mean,
if this was a market where stocks were breaking out and following through more, and we didn't have all these pullbacks every every other week it seems. We let them run a little bit longer, but right now it's buy support, sell resistance.
Okay, yeah. So, okay, well, let's wrap up with everything, and we can start looking at some charts. I just want to, I got a couple of really great emails from folks. You know, how did the active trend trading strategic picks do this week? We had one long trade. Our AMBA trade had got was basically, it closed out for an average return of 10%. That was our first trade of the year. Now we're rolled in here on VIPS. It's up about 3.39% since we got into it on the 15th of January. And I want to thank the great comments coming from Tamsin, who is over in, and I hope I'm pronouncing that correctly. We corresponded via email and chatted a little bit that way. Who's over in, you're in Portugal, right? No, Spain. Hopefully she'll let me know where she's at. I know it's but it's really awesome to get comments back from folks like this, and especially Barcelona, Spain. And so especially when they're generating a nice little profit on a monthly basis. And so thank you very much for these comments. And part of the service that we do provide also with active trend trading is I do a lot of education on Wednesday nights, and then you have access to those educational webinars via our website. And so each week for premium members, you get, you know, a select group of IBD quality stocks are highlighted for either upside, downside, or who knows which way it's going to go type of move. And so here's our cumulative running through the year so far. Got up to a nice start to the year. We're really happy with that. And then we did our first active trend, or our first early warning alert trade this week, and we took off a portion of that position for a gain of about 5.5% in a couple of days. And here's what we did earlier in the year, or last year, excuse me. And so, yeah, this is it is a market to take your profits quickly. And so, let's see what else we got going here. You know, both Dave and I, with our regular services, we're basically doing the active trend trading in the all about trends. Is you know, coaching, teaching a little bit on the technical analysis and how to read the charts and all that kind of stuff, and for individual stocks. But if you're a really busy person who just wants to eliminate the risk of trading single stocks, you might want to check out our early warning alerts. It trades index ETFs based on our proprietary means of entering and exiting the trade. And it's at a wonderful, really uncanny level of accuracy over the last 12 years, 80%. But check us out here. And if you are a how to make money at trading stocks person, you can go to this website. I'll leave that up for a second so you can write it down, or just drop me an email, and you can get a, you know, excess of 60% off. And this is a yearly subscription, so you don't have to worry about those monthly subscriptions. A yearly subscription, and there is a money-back guarantee on this. So let's see what else we got here. This is our thing on Clarify. So basically, that's all we've got for today, David. There just wasn't a lot of real news pushing anything today. You agree?
Yeah, I mean, the time to buy was last Friday.
Yeah, last Friday.
Or Thursday into the close. But, yeah, because now it's just you got to run with what you get. You just got to let what you have run, because we're getting closer to resistance levels. So if you put on anything new here, you're adding some risk to things.
I agree wholeheartedly. You know, we got into, you know, the trade earlier in the week, like we were strategically filled on our position on actually on Tuesday or Wednesday, and it went just launching off of that level of support and gave us a really nice return. And the other thing we're just holding on to. So so just want to remind everybody, see you next week. We are on next Friday, and we'd appreciate it if you have a friend who basically could benefit from seeing this, at least show them where the YouTube channel is. And so keep your egg growing. Here's David's contact information. Here's my contact information. And trade wisely and trade profitably. Now we've got a whole lot of stocks to look at, Dave. So here's a couple of questions. Is oil at a bottom yet?
Well, I mean, we're definitely seeing some positive structure in the charts of some of the stocks, and others we're seeing them have rallied now up into resistance at the downtrending 50-day moving average.
Mm-hmm.
So it's kind of a mixed bag. I can't tell you because, I mean, like I said, half the stocks are at resistance, others are making series of higher lows and are starting to pull back here. So I guess if I had to make a call on that, I would say we're probably due for another little pullback here, which will allow those stocks to digest some of their short-term gains here.
Yeah, yeah.
So the question is, will that pullback go into new lows, or will it hold?
Yeah, and I think that's going to also be driven here. Here's the oil futures. I have those up on one of my watch lists that I just kind of like. I monitor the futures just to see where things are going. And as you can see, guess what? Mid part of 2014, oil started falling out of bed. And at first I thought that was just, or part of a ploy by the Saudis in the U.S. to help control the Russians, because the Russians need to have oil up in this level at about 75. That's their expense for getting it out of the ground. Our expense for getting it out of the ground is about this level. And so, yeah, it's either going to, if it implodes anymore, it's going to really put a lot of the smaller oil companies in trouble because they have they tend to run a lot of debt. And so right now, from a weekly perspective, yeah, we may be finding some support here at 45 on oil, but there's been a lot of damage done here. So I mean, it could rebound up here. I mean, it could rebound all the way up to 60 or 55, and then turn back around and fall back over. Right now, we haven't seen any, at least on. We have not seen any a thing right now to say, hey, I'm ready to bounce yet. So I hope that helps. So David, we have a couple of stocks. I'll do LinkedIn. Do you have SLB?
SLB?
Yeah.
I don't think so.
Do you have NXPI?
I do have that one.
And do you have Ulta?
I have that one, yes.
Do you have SWKS?
Yes.
Do you have NCHL?
Nope.
Okay. Well, why don't you get, let's see, so you do have NXPI, you do have
Also
Ulta,
Skyworks.
and Skyworks. Why don't you pop those up, and I'll switch the screen back to yours, and I'll look at some of the other charts. Are you ready?
Hold on a second.
Okay. Will the reduction in oil make utilities a place to see better profits? Dorothy, I don't know. I don't follow the sectors like that much because I typically am focused just on the growth stocks. I am focused on the index ETFs, and
Okay, I'm ready.
okay, I'm switching to you, Dave. I think. No, there you are. Did it come up?
No, I still see your screen.
Okay, let's try this again.
All right, there we go.
There we
So
go.
NXPI and Ulta are both trying to break out, and you could say the same thing for Skyworks. All three of these basically are trying to break out, and it's just a question of, and this has been a tough strategy lately. It seems like all the breakouts don't go very far before they turn back in, trigger a stop loss, and then some of them continue to go and go up higher, and some of them don't, like LifeLock and Virgin America. So, you know, this is a, I think I've talked about this many weeks. It comes down to who you are as a trader, who you are as an investor. If you are buying breakouts, then you have to accept the fact that you're buying further away from support, and you're typically buying after the market's already made a short-term move, which is what's happening today with Alta breaking out today. And so you'd have to be willing to accept the fact that these stocks could pull back, and in doing so, the overall trend of the market is still intact. The overall trend of the stock will likely still be intact, and you just have to kind of sit through that. So again, that's for us. You know, we rather let these go, let them prove themselves, let them pull back, and the first time they pull back to support is when we'll look to buy them, and which is another very acceptable time to buy stocks that have pulled back to support for the first time or second time since breaking out. And by doing that, we're typically buying, obviously, at support, but we're also typically buying when the market's also attempting to bounce from support. So we're trading in tandem more with the indexes versus trying to fight the indexes here.
Are you good? Are you good?
I'm done.
Oh, okay.
Anything else
Sorry,
you want to
David.
look at?
How many did you look at? I have to
I
apologize.
did NXPI, Skyworks, and Alta.
Okay. And so, well, I'll jump over here and do a couple of on this side. And
I mean, Alta, let me just real quick on Alta. I mean, this one pulled back into support, and we were looking at it, but a couple of things. It just hasn't really made a whole lot of progress here from the breakout. I mean, the scale's not really all that exciting.
yeah,
And then the pullback wasn't as pronounced as we'd like to see. I guess we'd like to see it prove itself, like a AMBA, for example, that, you know, runs up into the $60 range and then pulls back to the 50, 51, 52 support range. You know, that's got a lot more scale for us than Alta. So
yeah. You know, scale is so important, both scale and range. I've talked about that a lot in some of our training webinars. And that's where you make your money. I mean, you know, stocks like Facebook. Facebook has two things not going for it. And one, it has a real poor range on a weekly basis, and secondly, its scale, it just doesn't move that much, because even if it goes back from where it's at to its current, you know, its past highs, it's only got like about a 7 to 10% move. And some of these other stocks, I mean, you're getting that, you know, and I'm not talking about the not necessarily volatile, but we're just looking for orderly patterns that have both those other characteristics, scale and range. So here is LinkedIn. Yeah, LinkedIn was a really great buy back here at 210, where it was doing these 1, 2, 3 bounces off of that, and then a rebound. And then seriously, well, and that was serious. It is right up close to hitting right up that resistance again, what David was talking about. And if the market remains weak, we could expect it to do this. If I was just getting in this stock somewhere in maybe the 230 to 232 level, if it gets back up here to above 235, I would lock in some of my gains, even though they're small. But the bigger question is, okay, if a person is watching LinkedIn, what was wrong with this move here, where it broke out of this downtrending, short-term downtrending line, and then it stopped just close here, and I can clearly see buying the breakout today. That was great, and that was fine. But you know, I would be looking to trade this because I like LinkedIn for a stock. I like it for a trade, stock to trade weekly because it does have great weekly range. Look at that; it's got a range of 24 bucks, and that's a little bit over 10%. And or 15, 19, 20 bucks on a $200 stock. That gives you some really nice opportunities for some short-term gains. But this was given all kinds of clues back here that it was ready to rock and roll when it was down here bouncing off of 210, bounced off this support line, and then it's been off the races for the last 3 days. And it's always nice when you buy a stock like on one of these alternative entry points, and then you see the volume kick in, and then you get to see the price action move, and when it breaks out like this, you go, oh, really awesome. Because if a person would have bought this on one of the alternative methods, breaking up through the shorter term trend line, well, right now you'd be up 5% and $12. So that's one.
Yeah, I mean, the thing with LinkedIn, I mean, if you are a breakout buyer, it's not been a fun stock because the last 2 times it's tried to break out, it's fallen back. It reminds me a lot of Restoration Hardware where it pulls back and then has this gap up and then does nothing but pull back and then gaps up and does nothing but pull back. So, it's kind of the only way to really make money from this stock at the current time is to buy it on a pullback. So I wouldn't chase it here. I wouldn't let it prove itself first. Let's see it break out. Let's see it go for a nice little run and then pull back.
Yeah. And the thing that I understand the mindset behind buying breakouts, but did you know that approximately 60 to 70% of the stocks that do in fact do breakouts, they do a pullback, if not all the way back to the point that they broke out, but at least close to it. I mean, there will be a little bit of a retracement, and it's on that retracement. So if you're a breakout trader and you miss a breakout, don't fret, because 60 to 70% of the time you're going to get a retracement for a second bite at the apple. And I agree wholeheartedly, Dave. And one of the things that I do is it depends on how you define a breakout. I mean, in reality, this was a breakout down here when it broke that trend line. That was a breakout above the trend line. But wouldn't it be nice if this breakout here was a lot closer to a stop loss than the breakout up here? Just something to consider. Let's see here. This stock, I'm not familiar with this at all. Let's see the channel. Matter of fact, it's not coming up. So whoever gave me NCHL, could you double in? NCHL is not coming up as on the stocks that I'm watching. I think I did put that incorrectly, did I not? NCHL. Okay. Baba. I just had an alert go off in my ears. It was the Marine Corps hymn, so. Come on, Baba. Alibaba has been kind of interesting. It may be setting up for a pre-earnings run. And during this time frame, whenever you're looking at picking up a stock, keep an eye on it for when are earnings coming up, because we are in earnings season, and so you can have just an awesome setup, but you run into earnings and then bam, you get whacked. And so just keep that in mind. And I always put them. I trade with Thinkorswim, and on my TOS charts, I have it set where it will show the earnings. Just as a reminder to me, I know that earnings on Baba is on the 29th of January, and that is after market, or no, correction, it's BMO, before market opens. And so Baba, what's it doing? It basically has come right up to the top of the downtrending channel that it has been trading in. You've got the indicators looking oversold. not a lot of momentum pushing it higher, and one of the things to always be concerned with is, you see this push up here? Well, what's volume doing? Or what's volume doing? It's not pushing up, and so that's explaining why this momentum here is not really looking all that healthy. Stochastics gotten back up. The true strength index has just gotten above the 0 line, but we've got earnings coming up on 29. So you may get a little bit push up back up to the 110, or it may just pull back here and then bounce this way. So that's what I got going on BABA. If you are a owner of BABA, depending on where you picked it up, right now, as Dave was saying, and I've been saying during this show, is it's at resistance, and what's been happening lately is when things are hitting resistance, they're rolling over and pulling back. I wouldn't necessarily short this stock simply because the earnings are coming up very, very quickly. So let's see, what else we got to look at here, Dave? You have SLB.
I don't think so.
Okay. And George, you gave me the...
Want me to draw it up?
Yeah, if you want to. Jorge, you give me... where is it? That stock, the
SLB or SLV?
SLB. I must be Schlumberger. Is it Schlumberger? Yeah, I think so. You give me NCHL, and when I put that ticker in, it doesn't register on as a stock with Thinkorswim. Is that the correct ticker? And so while you're drawing that up, David. Ah, okay.
I'm ready to go.
Okay, well, I'm going to switch to you, and then I'm going to call this one up. Or I do that same thing. Transpose the letters. Dave, you got it?
Yep. So this is another one that's been in a downtrend for quite some time, but is running into nearing resistance at the 50-day, and the question is, will it get above this, or will it first pull back and set a lower low, or excuse me, higher low, and then take off? And that's what we'd like to see. We'd like to see it come up here, hit resistance at the 50-day, make a higher low on a pullback, and then blast higher. That would be, for us, a confirmation that this stock is changing its trend from down to up.
Yeah, that's one of the things. Dave, absolutely correct. It has filled back up. It filled the gap, gone a little bit above it, but you're still in a nice little downtrend. One of the alternative ways of looking at this, if that got back up to that downtrending line, which I think that's the 50, right? 50-day moving average.
Mm-hmm.
If it got all the way back up to that and then showed some stalling, that would be a wonderful place to look at getting short. Of course, it depends on when the earnings are going to be happening. So, interesting. So, okay, I finally got the right one up here, David, on the other chart. Show my screen. So, can you see the chart of Norwegian Cruise Lines? One thing, Norwegian Cruise Line, that's got a pretty good volume going. Okay for a range of, it did fill this, because this black line below this is 10% below the 20, this is 10% above the 20, and so when I see the traction on a stock and it fills that gap, that's where I say, okay, that's got really good scale, and I like that because it means that if I jump into a trade, I'm probably going to get somewhere between 7 to 20% on it. What we're looking at over here, Jorge, is basically if you bought today, you bought on a good breakout, a bounce above the 8-day moving average. It needs to break the resistance at the 20. Oh. That's what's going off in my ears right now. Sorry, guys. VIPS is breaking out, or at least getting back up to its resistance area. Anyway, if it breaks out above the 20, then we can anticipate it going back up to at least 48. And if you got in about, where'd you get in, George? You got in at 46.12, so that's about there. And so, you know, it's about a 3-4% gain. And so hopefully the volume that came in yesterday is an indicative that buyers are going to take this all the way up. But again, just like a lot of the other stocks in the market, it is moving from a resistance area up to a support area up to resistance, and will it break this resistance and follow on up to the upper resistance area. And I apologize for the alerts that are going off in my ears. Right now I will have to remind myself to mute those that are coming from my Thinkorswim account, so I'm not hearing bugles go off in my head as I'm trying to talk about stocks. So, any other stocks? David, do you have anything else for Dave? Because I know you got to get on to your appointment.
Yep.
Okay. Hey, I just want to show everybody what was going on with VIPS. We're getting some additional traction to the upside here. Momentum hasn't really kicked back up to move back up, move on up. But if we break up above 23, this is one of our long trades. It's in the active trend traders, and we start pushing back up to, 24 to up to approaching 25. That's one of our preliminary targets to get out of this trade and take a little bit of profit off the table. And then the other trade we did for this week for the early warning alert system was on TNA. And we sent out text alerts and email alerts that actually we set up a trade that if we bounced off the 50-day moving average here, or correction, the 200-day moving average at 72.15 that we wanted in this trade, and sure enough, we got into it yesterday, and we took some, and so we got into it here at 72, about 72.25, and then we took off a portion of that when it hit the 50-day moving average for about a 5.5% gain, and as you can see, we pushed higher. We want to try to keep the rest of the stock, hold the rest of this for another 21 days, because our back testing has shown that that's an optimal time to be holding this. We hope that the market cooperates. So with that, oh, we got one more. David, one of your guys' picks is ZLTQ.
No, we didn't feature that in the newsletter. I have that personally, but I didn't put it in the newsletter.
Okay, ZLTQ. And this will be the last one we take a look at. This is from, oh yeah, that was the question.
Without looking at the chart, I can just tell you it's having trouble with the $30 range, just trying to clear that. It's
okay.
Hanging out near the highs there. So, it's not telling us to sell, but it's not really adding a whole lot of traction either. So,
okay, gotcha.
Yeah, holding near the highs on light volume, that's not a bad thing. So.
Oh, that's the oral liposuction pill?
I don't know if it's a pill, but it's some sort of procedure, yeah, that has like this cooling technology that zaps fat cells, I guess. It
freezes fat cells.
Yeah.
Ah, okay. And so, and it's not popping up for me. Next week, I have been uploading my new computer, and I will be utilizing it next week. So hopefully, we won't have this delay thing on things coming up. But yeah, Jorge, ZLTQ is not coming up for me right at this particular moment. It'll probably come up as soon as we shut the show off. So, hey, with that, folks, I'm going to call today's. Okay, great. I'm going to call today's show to an end. Trade wisely, trade profitably. David, knock him dead, break a leg, and all that kind of stuff with your interview.
I will.
Okay, thanks everybody for joining. The recording will be up a little bit later today. See you guys. See you, Dave.
All right, thanks.